working capital and capital employed learning quiz. So quite a lot of questions, but they're all very straightforward. So we'll start off with, what does working capital concern and how is it defined? Working capital concerns the trading assets and liabilities of a firm, and formally it represents the difference between a firm's current assets and its current liabilities, and it is defined as current assets minus current liabilities. Next, how is the current ratio defined? The current ratio is an important financing metric, and it is defined as current assets divided by current liabilities. What is working capital called when the current ratio is A less than 1 and B greater than 1? So, if the current ratio is less than 1, this implies that current liabilities are greater than current assets, and by convention, working capital is called net current liabilities. And secondly, when the current ratio is greater than 1, this means that current assets are greater than current liabilities, and in this case, working capital is called net current assets. Explain the difference in financing structure between companies where the current ratio is less than or greater than 1 and what it represents. When it's less than 1, so current liabilities are greater than current assets, working capital is a source of financing for a firm's non-current assets. And the current ratio itself, the value represents the proportion of current liabilities used to fund its non-current assets. When the current ratio is greater than 1, so current assets are greater than current liabilities, working capital must be financed from non-current liabilities and equity. And the value of the current ratio represents the number of times current assets exceeds its current liabilities. What type of asset or liability are the following, and what do they represent or comprise? So we've got inventory, accounts receivable and accounts payable, and property, plant and equipment. Start with inventory, also known as stock. This comprises raw material, work in progress and finished goods. Accounts receivable, also known as trade receivable, and this represents the amount owed to the firm by its customers for goods or services the firm has delivered to them, but they have not yet paid for. Accounts payable, this represents the amount owed by the firm to suppliers for goods and services that have been delivered to the firm but have not yet been paid for. And those three items are all part of working capital. Last one, property, plant and equipment, non-current asset, often referred to as fixed assets that the firm intends to hold for 12 or more months. Examples of these include land, buildings, trucks, machinery, transportation. What two perspectives does capital employed have, and how is it calculated from each perspective? So from an operating perspective, we can define and calculate capital employed as working capital, so current assets minus current liabilities, plus non-current assets, though that represents the operating assets of the firm. And those are funded with a mix of non-current liabilities plus equity. And from the accounting equation, the two must balance, so working capital plus non-current assets is financed with non-current liabilities plus equity, and they are equal. What is financial leverage, and how is the financial leverage ratio defined? Financial leverage arises when a firm's long-term financing comes from both debt and equity rather than equity alone. The financial leverage ratio is defined as capital employed divided by equity. How is net assets defined, and what does it represent? Net assets is defined as total assets minus total liabilities, and it represents the net worth of the firm in accounting terms and is equal to the value for equity. And these are the questions that we've just looked at.